guys, good evening and welcome to Moneycontrol. I'm Karunya Rao and joining me in conversation to decode the numbers of TCS for the quarter gone by are two special guests, Mr. D.D. Mishra from Gartner and N. Mahalakshmi from Moneycontrol. Guys, thank you so much and a very good evening to both of you.
Good evening, Karunya.
Good evening.
Ms. Mishra, I'll start with you first. If we look at TCS's numbers, it looks like a steady set, but of course, the big headline here is that the fact that TCS has crossed $7 billion in revenue, which was clearly a beat on expectations. Margins, however, have missed street estimates. Now, talk to us about what has been your big takeaway from the results for TCS for the quarter gone by.
So I'm not much surprised by the fiscal situation and the numbers which they have reported, except for the thing that, the attrition rate, which we have been watching for quite some time. So TCS has had a very good track record of managing its attrition rates below the industry levels, and it looked very good on its balance sheet. But this year we are seeing that this time we are seeing that it has gone up, and we have been seeing that consistently quarter over quarter the attrition rates has been going up. Now this is a bit of a concern for us, that the attrition rates for TCS, which was good, has not shown some better progress, but it has worsened. But having said so, the fiscal situation from that perspective, we have always seen that the TCS has a better fiscal benchmark compared to the average in the industry, which we have seen, and it is not surprising because TCS has got the good clientele, and they have managed to have a good intimacy. The average customers are satisfied, and they have managed the relationship quite well. They have shown flexibility with their customers, and in terms of their delivery, in terms of pricing flexibility, we see that they have shown a lot of flexibility in that particular area. But having said so, there are few things which we need to also look at from that perspective. That TCS has got a good legacy workload at this point in time, which may become a bit of a concern going further. So that is one part of it, and how TCS is going to manage that particular shift and change is something we need to watch out for. And the second thing which we see, that TCS being a little bit comparatively more conservative than others, they are not into inorganic growth that much, which we see that their competition is doing. So in a fast changing market, how much they will be able to hold on to their evolutionary approach is something which we need to watch out for.
Okay. Mahalakshmi, if we look at some more highlights of the earnings fine print, on one hand, they've said that their attrition has dropped after 6 quarters of consecutive uptake, but on the other hand, their net headcount addition has come in the negative. While they have managed to give out a very impressive dividend for the company, for shareholders at 75 rupees, at the same time, the operating performance has been weak. So there's a mixed balance of pluses and minuses. How do you think Street is going to digest all of this, coming out of TCS's numbers?
So, Karunya, my take is on the numbers is not as negative at all. I don't think it's really a missed pack. It is just a continuation of what was the story last quarter also. And attrition has indeed come down from 21.5 to 21.3, I think. And the only surprise factor for me, I mean, important one was that, you have a net hiring which has gone down by 2,197. But then Rajesh Gopinathan said that is something that they planned for. So now you can read however you want to read into it. Maybe it is a sign of caution, maybe it is not. So we can't really second guess the management on that. But one or two things I'd like to note. One is that he used the term extremely constrained environment. All over the place, they were saying that the North America demand continues to be vibrant. In the last quarter, also, they had said the same thing. They had also said that Europe was a problem last quarter. This quarter, again, they have said Europe continues to be a problem. They also said that client decision making, which I don't think they spelled it out very clearly last quarter, but this quarter they said that the client decision making in Europe is slowing down. So obviously, Europe is a bit of a trouble area. North America is still not showing any signs of slowdown, and I think the management also explicitly said, which is again a continuation from the last quarter, that tech spends continue to be intact. Cloud spending is intact. There is no stopping from clients. In fact, they're looking at cloud 2.0 taking off. People are looking at AI and stuff like that. So the company narrative, if you see, doesn't seem to have, to my mind, doesn't seem to have changed very much from the last quarter. This hiring number is definitely, at a pinch, it makes me a little cautious. The other thing is operating performance. You said, I think it's not bad. I mean, operating margins have actually gone up from 24% last quarter to 24.5%. It's a 50 basis point hike over the last quarter, which I think is a good thing. In fact, last quarter they had said that they see some uptick to margins, which is played out. So I don't think overall it's a bad set of numbers. The narrative continues to be the same, but the jury is still out on when US recession hits, and if at all it hits. Right now, I think the street also believes, largely people believe, that it is a foregone conclusion. It's just a matter of time, but we have to wait and watch. If that happens, when that comes to pass, will this tech story, continuation of the cloud story, will that continue? Or will companies really cut back or at least slow down their tech spends? That is still in question. So far, I think between last quarter and this quarter, I don't see any change in the body language or in the language that the management has spoken.
Yeah, right. I mean, yes, like you said, they have seen an improvement sequentially in their margins, but a slight miss as far as the estimates are concerned. But back to you, Mr. Mishra, I want to understand how you see that the commentary coming in, especially on the Europe and North America markets, because they've said that across different markets, the caution has a different color. I'm just reading out from what Rajesh Gopinathan has said at the presser. North America, UK making up for 2/3 of their revenue. They're saying the environment there is supportive right now. But for how long do you see that continue in terms of deal wins, in terms of visibility? Because the management has not given a very, a big picture sort of commentary or scenario right now.
Yeah, see, the thing is that the market is very competitive and very complex and crowded as well at the same time. So I'm not worried about that caution, and probably that caution is for everyone actually operating in those markets. The caution can be also, I'm not very sure that what other factors might have played a role in that particular caution, but maybe that they are also taking a cautious approach towards the recession as well. But having said so, I from the interactions which we have with the clients, especially in those markets, it doesn't seem to be a big concern, or maybe that can translate into an opportunity, because when there are such situations, clients do actually piggyback on digital transformation to navigate through those challenges. But having said so, it comes with a little bit of risk as well, and this is what we have seen during the pandemic times, as where initially there were some challenges and the clients were reluctant to spend more, but later on we saw that that threat became an opportunity for many Indian players, including TCS and other Indian players as well. So it may be a bit of a cautious approach. Being a conservative organization, they wanted to be at the right side, but I don't see that much of concern, apart from the competitive market and changing client requirements, and there are other risk factors which are there in terms of competitiveness and crowded market. I don't see much, bigger challenges. But having said so, TCS has got a large legacy workload, and any significant shift in the client requirement may drive TCS to quickly transform its mix of legacy workload, because you don't make a lot of profits in the legacy business. It's a more commoditized kind of an environment, and that may cause some concern to TCS. But other than that, I don't think at this point, as we speak, recession is going to hit the IT industry, IT services industry as such, very hard. But it's a kind of evolving situation, and we need to wait and watch.
Okay, all right. And Mahalakshmi, how do you think the markets will react tomorrow morning? Because right now there is a barrage of comments and interaction happening on our YouTube feed, and most of it is rather negative or cautious on TCS. Do you think TCS, in terms of its cons, if we have to look at, or if we have to point our finger at anything rather negative or rather disappointing in the numbers this time around, what could it be? Because most people right now on our feed are, expecting this stock to tank tomorrow.
I don't see any good reason why it should really tank. Today it was up, by the way, 3%, and I think
Yeah.
there is no negative surprise in these numbers as far as I can see. I don't see the management narrative change substantially, nor do the numbers are not a huge unpleasant surprise or anything. But then the fact is that if you look at the overall narrative coming in even from the analysts, that that narrative has changed decisively for more bearish over the last 1 year, even over the last 1 quarter. Now several analysts say that from a year on year growth of early teens, you're going to probably see a single digit growth year on year from next quarter onwards, at least for FY24. So the question is, now a certain amount of correction has already happened, because all these stocks got re-rated, and their PE ratios perhaps doubled during that period, pre-pandemic to the peak valuations last year. From there, it has really come off. And I was just looking at some numbers in terms of, just to understand the street sentiment. Last year, same time, TCS had 30 buys on Bloomberg, 12 holds, and 8 sells recommendations. This year, there are 23 buys. I mean, right now, as of yesterday, 23 buys, 16 holds, and 11 sells. So clearly, the number of buys has come down substantially. Holds have increased substantially. Sells have increased substantially. So
Yeah.
the mood generally is bearish. And the other thing is, even now we have not seen US slowdown really play out. I think the
Yeah.
market will really look for early signs of a slowdown overall in the US, and then react and see whether TCS and other IT companies are really able to hold up this whole narrative that tech spends will not be slashed. Does that come true or not? All of those things, I think we can't really take a call. These are all imponderables. We'll have to wait and watch. But at the moment, I don't think the sentiment is moving to a positive trajectory. So it would be a hold or a wait and watch sort of scenario.
Yeah, all right. We will, in fact, wait and watch, because a lot of these earnings are going to be trickling in later this week. So we'll see what exactly happens, how's the forward-looking commentary and forward-looking projections for growth. With that, guys, thank you so much once again for joining in and for sharing with us your analysis and your thoughts on TCS's report card for the quarter gone by. Thank you guys for tuning in.
Thank you.
Thank you so much.